Hello and welcome everyone to another weekly market commentary from StashAway. With us, of course, our Chief Investment Officer, Freddy Lim. Hey, Freddy.
Hi there, good to see you again.
Yes, good to see you. I see you changed locations, maybe?
Yes, I moved to a new place. I was just busy setting it up so I can have this conversation in a comfortable setting.
Yes, no, it looks really good. It looks really good. We're not looking to you from the side anymore. We're looking straight ahead now, so that's good news. But yeah, anyways, we have a busy schedule for today. I think obviously a lot of noise in the markets. Markets have been, quite positive in terms of returns, definitely, right? I think there's some outliers, obviously, still in the tech sector that is still outperforming heavily. But in general, it seems like we're inching very close in the other parts of the markets to almost back to the start of the year, right? With that being said, though, let's dive in a couple topics that I think would be very interesting to hear your opinion on. And first one is Hong Kong, right? So there's a lot of different constructions going on there in construction sites in terms of markets. One being the China security law that we discussed before has been passed, right? And I think first use was made over the weekend. Can you maybe give the listeners a little bit more, your point of view on this and what that means for markets?
Yes, as you know, Hong Kong businesses have been plagued by a very long-standing protest, right? The umbrella movement years back has morphed into a free-flowing, non-centralized wave of protests in Hong Kong way before COVID-19 hits Hong Kong again. It's a really I'm really sympathetic towards business owners. I know people who own shops, right? They're looking to sell it on a cheap, and people who's just trying to really cut losses. Now, the security law, when it's introduced in Hong Kong, allows direct government intervention, right? I mean, China can now aid Hong Kong government in policing, in maintaining order. And anyone who interferes, foreign interference in Hong Kong could also be now managed under this law. And it's taken negatively by most people, average person, including myself. I took it negatively when it came out last Friday, but surprisingly, the market went up. And the good reason for that is now law and order is easier to maintain. A protest is harder to be instigated. They need to apply for it, get approved. They can't use certain inflammatory slogan is against the law. And that really would tone down a lot of stuff. And that gave a lot more power, a lot more order to things, and businesses are looking more positively going forward. So that is one way to look at the reason why the Hang Seng goes up a lot, why the China A50 shares goes up a lot, simply on passing of that law.
Yeah, but with the passing of the law also, we got some, obviously, in the international, the Western world, countries have made, strong statements, from, the UK already offering potentially citizenships to, every Hong Kong citizen for the UK. Trump advisors, it didn't come directly from him, right? But some of the advisors went onto Fox News talking about the dollar peg, disrupting that, the Hong Kong dollar peg. So do you see those, noises and threats in terms of also sanctions that come with it taking over there or not?
Well, it's a mess. I mean, the rhetorics are purely rhetorics right now, but if it's still a nuclear option to do what they actually mean when they say it. But if they do, there's going to be a complex chain reaction of things happening all over the place. For example, Hong Kong operates under the currency board to maintain the peg of, I forgot exactly the exchange rate, let's say 7-1. But that is actually, the HKMA has to maintain a certain amount of US dollar and other FX reserve, foreign currency reserve from trade. And that is where, if you say, for example, Hong Kong dollars is down, you want to maintain the value of Hong Kong dollar, you buy it back. But you can only buy it doing so by selling your FX reserve to exchange for it, right? So when you say you want to interfere, want to disrupt that, it means you're actually going to get the US Federal Reserve to come in and do the opposite to the HKMA. This is unprecedented. The President of the United States have no such power to even influence central bank's monetary policy in the US today. It's an independent institution of politics. Governor stays appointed for 8 to 12 years, depending on which positions you are. Presidents don't. so I would think that it is a bit of a stretched situation to say that I'm just going to get a US Fed to sell Hong Kong dollar when the HKMA is buying Hong Kong dollars, just to disrupt the pack. I don't think that's possible today under the setting.
Yeah, no. Thanks for that explanation, because I think this has just been dominating the news, right, the last couple of days here. But with that being said, I think this whole China US or China Western world kind of back and forth will keep continuing, right? I think Trump is also not done with the WHO and their involvement with the Chinese in terms of the coronavirus, right? So he now said he's going to be withdrawing, right, from the WHO. Yes. So let's see what kind of impacts that has for markets. Who knows? Probably not so much, right? This is more on a different level. But you still have that, right? What I do want to tell you, or just really quickly discuss, because I don't even know if we can take it serious, right? But since we're talking U.S. election inching closer and closer, and I said we would probably be speaking about this over the next few months a little bit more, right? 4th of July, we don't know if he was at a party or not, but Kanye West threw his head into the ring, trying to say that he's now going to run as well, and we don't know. But this is just another curveball that the U.S. election is throwing, right?
It's becoming entertaining for now, but not market impacting at all. So heading into it, we'll see. But the edge of Biden over Trump, at least on this one, is so significant that the marginal error is not like when you have Clinton versus Trump. It is hard to catch up to the lead unless you really pull off quite a few ingenious policy moves. At the rate we're going, picking fights over the places, I just can't read into that yet.
Yeah, no, we'll keep a lookout for everyone. So we'll be coming back to this anyways over time. So let's move on to some user questions, right? I think we got a couple good ones from one person that we do wanted to address. And if you ever have questions yourself, please feel free to put them in the comment section below or send us an email, and we'll pick them up and discuss them over one of our other videos. So let's go to David Chang's question, Freddy. It's two parts. Let's go with the first one first, right? Is there a particular investor that you look up to?
Okay. I'm a data person, so I'm quite selective, and I'm not so much about thought leadership, and I really look for non-inferentials. I look at data, who's ingenious at math, and apply to markets. So from that criteria, I would have to say James Simons and Edward Thorp. James Simons, as you know, is the founder and chairman of Renaissance Technologies, probably the most successful hedge fund ever in history of mankind. And the Medallion Fund is actually a closed fund, not available for anyone but employees and their own money. Right? It's a very mysterious fund that's performed wonderfully. Very data-driven approach. They only hire hackers and scientists and anyone but in finance. So it says a lot about discipline and scientific approach to the fund. Now, the second one, the Edward Thorp, is an interesting character, even more than anyone expected. In the 60s, he traded warrants, call options himself, using his own formula, and 10 years later, we had a Black-Scholes-Merton formula that won a Nobel Prize. This guy didn't care to get a Nobel Prize, but he just sort of used it for trading, right? And this is ingenious. He's also known for being the first guy to beat the casino. He's the first to design devices and using probability and statistics to game the blackjack and all. He wrote the book Beat the Dealer. And this is also the first guy who, about more than 10 years before Bernie Madoff Ponzi scheme was discovered, he was the first one to do forensic studies into the accounts and flag it to the SEC. Wasn't taken seriously, but he was a decade early. This is a man of all markets, a man of ingenuity. So these are the two persons, James Simons and Edward Thorp, I really look up to.
Oh, that's awesome. No, I think super interesting question from David, I think, and thanks for the super interesting answers as well. So the second one I have to look up myself, so do some research there. But he's following up, David, with a question. Are there any books that you would recommend to read for general investors, right? So I think you mentioned one by Edward Hort just now, but anything you recommend for general investors to read?
I would say Against the Gods, The Remarkable Story of Risk. This is a book written by Peter L. Bernstein. It actually is interesting. It's like a bit like a history of money and banking, because it looks at early days when voyagers from UK were going around the world to conquer the Far East and to bring spices and trade back to, I think you call them the East Indies Company, right? So it's very interesting in history. And these voyages were not without risk, and the concept of insurance were developed back then. And then there was concept of where do you store the money and the goods from these voyages. And then you have the concept of votes, which became a bank today. So concept of banking came from this history. So this is an extremely interesting book about mankind's effort to manage risk against natural calamities, storms, seas, voyages, against any sort of risk. So I would strongly recommend it as a classic book to read. And the other one is a bit more modern, 0 to 1 by Peter Thiel. It's a collation of Peter Thiel's lectures at Stanford on startups and venture capital ideas, and stuff like invest in the J-curve and how you always do something that can be 10x better but nothing less. Otherwise, it's not worth of you creating the company to compete with the incumbents. There's a lot of very instant classic concepts, exceptional concepts in the exponential growth. Why averages doesn't work well in venture capital investing? Why you got to concentrate? Is it concentrated investing really there? Why you got to roll up your sleeve and manage those companies more actively? Right? So there's a lot of such things.
Yes, I must agree. So this is a book I've read a couple of times as well. So very good book. Well, great. That's hopefully answers David's question. David, again, thank you for asking those. I think a lot of listeners will be happy that you've done so. For everyone else, again, if you have any questions, put them in the comments below so that we can pick them up. For everyone else, I also have a couple upcoming webinars from StashAway. On the 16th of July, this is Thursday next week, in Singapore, we have a webinar on investing basics. It's at 7 p.m., so you can sign up for that on our website, on the links in the description of the video, as well as on any other social media feed you can find us. For Malaysia, on the 22nd of July, that's a Wednesday, at 6 p.m., we have how to plan for your retirement. So the team there will, teach you some cool strategies on how you really can create a good plan for your retirement. So if you want to sign up for this as well, again, links in the subscription below. Otherwise, Freddy and I will be with you again next week. And Freddy, you have a good rest of your day, and to all the listeners as well. So see you all next week.
Till next time.
Bye-bye. Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the StashAway app. It's available in the Apple App Store as well as the Google Play Store. So you can start on your financial journey right now.